Brilliant Minds in Real Estate is a podcast series that brings illuminating interviews with today's most relevant and motivating leaders throughout all corners of the real estate investment sector. I'm your host, Suraj Nambiar. My special guest is Ronald Philip, Senior Director of Strategic Planning at Agility Logistics Parks, the industrial real estate business of Agility, a publicly traded $5 billion logistics and infrastructure conglomerate which employs more than 22,000 people in 500 offices across 100 countries. Agility Logistics Parks is one of the largest private owners and developers of warehousing and light industrial parks in the Middle East, Africa, and South Asia. It funds, builds, and manages international standard facilities that help companies operate and expand in the world's fastest growing markets. Prior to joining Agility, Ronald worked with McKinsey in the US and in the UAE for 6 years, serving clients in the emerging markets, leading projects on topics related to strategy, predominantly in the infrastructure, real estate, and transportation sectors. Prior to McKinsey, he worked with the World Economic Forum in New York, and in India, he worked with PwC, GE Capital, and the World Bank. Ronald has a diverse academic background, ticking boxes in engineering, business, public policy, and executive education. Ronald grew up in Zambia, England, and India, and has worked and traveled in more than 60 countries across the world. Ronald, it's an absolute pleasure to have you on the show.
Thank you so much, Suraj, for having me. It's a real pleasure.
You have a really interesting and non-linear journey across private, public, and non-profit sectors across continents. Is there a common thread that runs through?
Yes, there is a common thread. As hard as it would be to believe, it's really been my passion for economic development in the developing world, and particularly through private sector investment. So I grew up in a copper mining township in Zambia, and then got a scholarship to middle school in the UK. And after that, grew up in India. And, I was very clear from a very early age, where my mother was a doctor in our copper mining township in Zambia, that I wanted a career that had some impact on society. So my first job after college was with the World Bank, evaluating the performance of World Bank projects around the world. So I travel into the field to remote villages and different parts of the country to evaluate the performance of World Bank funded projects. And that's where I saw very close up the impact of a simple road, because it meant that kids could go to school. It meant that people could sell their produce in markets further away. Very, very powerful. And even while I was at the bank, I was exposed to the work of the bank's private sector development arm, the IFC. And then that's when I got very excited by the impact that the private sector could have in the developing world in terms of creating jobs and opportunities. So my career since then has always been linked to either investing directly in the developing world or enabling that, either as an advisor or consultant, or working with various actors at a higher policy level. So that's been the common thread, economic development in the developing world, largely through private sector investment.
Ronald, let's talk about education. You've had an eclectic academic background. You've studied engineering in Bangalore, where I'm from, got an MBA in finance from the prestigious IIM, followed by a master's in public policy from Harvard, and then a global leadership fellows program at the World Economic Forum. Safe to say that you've studied more than most. What course among the ones that I just listed do you feel is the most rewarding?
So Suraj, like any good Indian middle class boy, I went to engineering school and went to business school. After business school, I worked in infrastructure, finance, and development in South Asia. And that's where a lot of, the elegant business cases and financial models that I built met the real world of politics and social society, right? So one of the large projects I worked on, which was a new special economic zone, involved a lot of land. The deal was signed. It was a PPP. But then when land acquisition needed to take place, land acquisition was happening at a government rate that was a fraction of the market rate. So the villagers started protesting. There were riots. The army was called in. People died. Then in the next election, the government was thrown out, right? Similarly, I worked on a restructuring of Bangladesh railways. While we were there, the army overthrew the government. So there was a coup. and we had to be evacuated, right? So all these, elegant concepts that I learned in business school kept getting derailed by the real world of political risk and political economy. So that's when I figured that to really get to do any sort of infrastructure or real estate development in the developing world, I needed to build a deeper understanding of policy, but also a bunch of soft skills that would help in this complex multi-stakeholder environment. So that's why I went to the Kennedy School of Government at the time, which is now called the Harvard Kennedy School. And that was the most rewarding in many, many ways. So for starters, I built a whole bunch of very important soft skills that I think have served me well. There's a very popular negotiations course at Harvard that was an incredibly useful life skill, not just in the business workplace, but also at home, right? So I developed a whole bunch of soft skills. The Kennedy School is the most international of all the 12 graduate schools at Harvard. Around 50% are international students. So I also built a lot of very useful cross-cultural skills and networks, right? In the 10 years since I've graduated, I have met Kennedy School alumni and classmates across, say, 25 countries, right? And they have been, obviously it's a great bunch of friends, but they've also been very useful in terms of insight, in terms of hosting me, in terms of, making introductions in different parts of the world. So that cross-cultural network and skills also help. And the third thing has been the intricate understanding of policy making, right? And what it takes for a government machinery to both formulate policy, but also implement and execute it, which is much, much tougher, right? I had a unique opportunity during my summer internship to win a fellowship to work in the mayor's office in Los Angeles and work on two very cool things. One was the rollout of electric vehicle charging infrastructure, and the second was a feed-in tariff, solar roof. And again, both were very complex policies, and we needed to figure out, how to get public support, how to roll these out and make them successful. So I think the Kennedy School experience was invaluable, both in terms of soft skills as well as understanding the policy environment in which private sector investment can succeed.
Very, very fascinating. Ronald, tell us a little bit now about Agility and the industrial real estate business that you had strategy for.
Sure. So Agility is a classic emerging markets business that has grown incredibly over time. Its roots are in the public warehousing company of Kuwait that was privatized. And then that company, over time, did around 50 acquisitions around the world of largely logistics and 3PL, so third-party logistics businesses, to build a global business across 100 countries that is, modern-day Agility. So it is large logistics business. That's one part of the business. The second part of the business is a group of real estate and infrastructure businesses. So a large industrial real estate business that I'll talk about, but also airport ground handling businesses, a large mall in Abu Dhabi. The third leg of the business of the conglomerate is a group of digital ventures that we are incubating or investing in, which is called Agility Ventures and Shipper. So I head strategy for the industrial real estate business, which is called Agility Logistics Parks, which is our kind of business that we started from, kind of warehousing and industrial parks. So we, are the incumbent, the largest warehousing developer and operator in Kuwait, in Saudi Arabia. And we also have logistics parks across India and across Africa in 5 African markets right now, and we plan to expand that business. So vision very much is to be a leading industrial real estate developer in emerging and frontier markets.
Given your presence in a lot of emerging and frontier markets, can you talk about some challenges in building an industrial real estate business, especially in, the likes of Africa, Asia, etc.?
Sure. So I think there are many nuances and interesting problems to solve while building an industrial real estate business in the types of markets that we are in, which are very different from, I'd say, developed markets, right? So the first thing is that there is no kind of one-size-fits-all kind of model for all the countries we operate in. Africa, for example, is 54 countries. So the first problem statement is market selection, right? How do you choose which markets to prioritize and allocate capital to? And what we've learned is that, all the markets that we are in, India, Saudi Arabia, Kuwait, the various African markets that we are in, are very different in a few different aspects, right? One is obviously the stage at which they are in terms of industrial real estate development have, a lot of these markets had go downs, very poor quality warehouses, and they're on this continuum where they're moving towards broad acceptance of classic grade A international quality warehousing. So each of these markets varies on that. The second is, the size of the market and absorption, right? How fast can we lease out space in each of these markets? Then there are other aspects like the country risk, the currency, which sees wild swings across some of these markets. So market selection is a very important aspect because you have to select the right markets, and the level of competition for an institutional developer like us is different in all these markets. India, for example, is a market where a lot of institutional developers, real estate developers, and industrial real estate are present. In a lot of our other markets, we are often the first institutional developer in those markets. Then there's a lot of complexity in each of these markets in terms of land acquisition. Land acquisition in a lot of in the developing world is incredibly complex and a core competency if you need to do well. Right. And we've had a lot of different experiences in each of our markets. Safe to say, you need to be very careful. You need to have a very robust legal team that works with the development team throughout the entire process. Then in terms of development, in a lot of these markets, especially in Africa, we have had to import materials from outside. There is no supply chain in terms of the materials, in terms of the talent, right? So we bring in talent from other markets. We have a core engineering expertise that is headquartered at our corporate headquarters. But the interesting thing is that in terms of design, we've had to tailor make products or tweak them depending on different markets, because depending on what customers want and are willing to pay in each of these markets. So product design itself varies or needs to vary per market. The final aspect of the business is leasing. In some of our markets where we are selling essentially a brand new product, there is a lot of customer education that we need to do. We need to help them. We need to influence their corporate headquarters and a whole bunch of other stakeholders so that they are able to appreciate and switch from a lower priced but very poor quality product to our product, which prima facie seems more expensive, but actually because of the better storage utilization and because they can store upwards rather than horizontally, we're actually a better value proposition for them. So I think there's a lot of different complexities and nuances and challenges in terms of building an industrial real estate business in these markets. It really varies, from market to market, and there are different challenges at every stage that I've highlighted.
So Ronald, can you bring more color to your role as head of strategy for the industrial real estate business?
Sure. So because of the nature of what we do and the broad variety of markets that we're in, right, as diverse as Mozambique, Cote d'Ivoire, Saudi Arabia, and India, the important thing is, one, that I need to be, as the head of strategy, I need to be deeply involved with the business, right? There is no data, right, on industrial real estate. So a lot of the international property consultants come out with rich data and report and research on markets like India and perhaps to some extent Saudi Arabia. But for most African markets, there's very little data on industrial real estate. So I've had to go on the ground, and in each of these African countries, I've made several trips. I go into warehouses. I spend entire days talking to customers, going from warehouse to warehouse with various brokers to really understand and get a on the ground feel of some of these markets, right? In some of these markets, we've commissioned our own proprietary research, including in one African capital, right, just recently, where we asked a property consultant to map all the large warehouses that were there so that we had a very detailed on the ground perspective of the markets, right? So I think it's very hands-on for starters. The second is that your strategy needs to be very dynamic, right? You can't set a 5-year strategy and then just keep it on the shelf. Things constantly change, right? And COVID is one wonderful example of that, right? So your strategy needs to be dynamic. And so every 3 months, I'm constantly refreshing our assumptions as well as our financials and capital allocation, right? The third thing is I work very closely with the P&L owners because, it's great if I develop a strategy, but if it doesn't get implemented, then, it's not very useful. So I work very closely with the P&L owners in terms of problem solving, how we execute some of the strategy, how we change it. I'm involved in a lot of customer discussions. So I also have a front-end perspective of how we need to change, tweak, and implement our strategy.
So you mentioned COVID, and that really has dramatically impacted and continues to impact the global real estate market. For example, it's brought more than 5 years of expected evolution in the online retail landscape into less than 5 months. In contrast, challenges have become far more pronounced in the retail brick and mortar. Collectively, I think these changes have prompted retail owners to explore the opportunity of potentially converting their retail space into something that you're a lot more familiar with, which is distribution uses. Do you agree with that? And what are the big sort of picture trends do you see happening in the market?
Sure. So I think it's a very exciting time for, where we sit in terms of industrial real estate. You mentioned COVID as one of the big drivers. I mean, yes, COVID has accelerated some, big picture trends. So e-commerce was already a very big driver, right? The kind of the switch to omni-channel, right? So that has created e-commerce around the world is now the largest, growth a source of demand for us in the industrial real estate business, right? More so, I'd say, in developed markets as well as, say, India and Saudi Arabia. In India, in Africa, e-commerce is growing, but they still need to migrate to higher quality warehouse. So e-commerce is, I think, a huge driver, and that's been accelerated by COVID. You mentioned retail owners having to explore the opportunity to convert retail space. So that's an interesting change that's happening. And what is happening is that there are a lot more use cases, right, for that kind of real estate. So one is, for example, dark kitchens, right? So dark kitchens are now setting up in this kind of disused retail space. The e-commerce giants, as there's more demand for same-day delivery or next-day delivery, they need to have distribution centers which are smaller and more centrally located. So, that's another use case for some of this disused retail thing. We have to see how this plays out, but I think that, that'll be interesting, the new use cases. There will be a flight to quality. So, I mentioned that in the developing world, a lot of people use very poor quality go downs and kind of really poor quality warehouses. I think with COVID, customers, shareholders really care much more about where you store your goods, right? And the hygiene and the health safety elements, right? So there's going to be a flight to quality, which is good for institutional grade A developers like us. On the flip side, I think because of the recession in a lot of these markets, we might see lower FDI into a lot of these developing markets. And, there are many nuances around that. So it could mean that, for example, the kind of new investments or new tenants, multinational tenants that we would expect to see in some of these markets might delay their plans, or instead of them putting in FDI into their own facility, they might want to preserve capital and instead lease a ready facility from a developer like us. So we have to see how that plays out. Also on the policy front, we have to see what big policy changes there are that therefore impact an industrial real estate business like us. For example, in India, the big policy change around goods and service tax changed the industrial real estate landscape dramatically, because it meant that there was then scale to set up large regional distribution centers, etc. So the African Free Trade Agreement, for example, it's finally there on paper, but the implementation of that policy will impact how people choose to store their goods, their distribution centers across regions, and therefore the demand for high quality warehousing like us. So these are some of the big picture trends I see: growth of e-commerce, new use cases, flights to quality, and impact on FDI or risk perception in some of these markets. And the jury's still out on whether the policy drivers can enable the growth of more trade and therefore the demand for industrial real estate.
I have to agree there, Ronald. In some of the transactions that we're looking at, we are clearly seeing preference to assets that are performing well and belong to the right asset classes in the right locations. So they're really the winners. We're seeing investors overbid for some of these assets, while even relatively decent performing assets and non-performing assets are really being sold or potentially sold for cents of the dollar. So I can't agree with you more. Let's switch to the fun section of the podcast. Tell us the latest book or podcast that you're currently listening to or perhaps recommend.
Sure. So, I've recently been reading a bunch of stuff related to coaching. So I'm reading The Trillion Dollar Coach on Bill Campbell, who's, worked with the leadership teams and Google and other top Silicon Valley giants. And I'm also reading Leading, which is written by Michael Moritz of Sequoia on Alex Ferguson, the legendary Manchester United coach, right? And it's been fascinating to see how some of these lessons on, coaching sports teams applies in the business world, right? And how you can drive high performance across teams. So I'm reading those books, but I'm also at the same time watching this series on Amazon on great coaches. So that's what I'm reading right now and watching right now.
One final question before I let you go, Ronald. In all your years of developing and implementing strategy, tell us one time you failed and what you've learned from that experience.
Sure. I've had many failures in implementing strategy throughout my career. But I think the most important one that shaped my approach was when I was working on a restructuring of Bangladesh Railways over a decade back. And, they had a certain structure for their business. And we came in as an international team with former railway professionals from British Railways, from some of the Canadian and American railroads. And what, the initial prescription that we gave them was that they needed to change to a structure that was more similar to British Railways. Right? Because, we thought that would work for them. The management team fiercely disagreed. And they gave us several reasons why the British Rail model would not work and why it wouldn't work in their context. And then we engaged them and, it emerged that a better model for them might actually be from Indian Railways, which was their neighboring country, right? So we came to a better solution, a bespoke strategy solution that worked for them and that wasn't something that was taken from another market that had really no relevance or that would fail in their context. And what also worked there was the detailed and very close engagement with the management team that would have to implement that. So that was a very useful experience in developing and implementing strategy.
Ronald, thank you so much for taking the time.
Thank you, Suraj. It's been a real pleasure.